Yo, what's good everybody? Welcome back to another video. So today we're pretty much just gonna keep covering the topic of Confluence trading, where what we simply do is grab a bunch of technical indicators together and we simply look at the probability of the outcome of a specific trade. So what I'm gonna be covering is how you could have pretty much just caught any of these past moves and how you can implement this into the future to make a profit, to make money off of these trades. So really what I'm going to focus on is this move right here. I'm going to be breaking down all of these moves here. So pretty much when you actually take your first look at GJ, right, you want to set up your main levels of support and resistance, your main levels of supply and demand, which right here we can identify we have a level of supply, meaning support. So once price actually came down into support, right, notice how price grabbed liquidity and immediately had a big rejection to the upside. So it was kind of like price came into the zone and then right away rejected and went in the opposite direction. Now, keeping this in mind here, how price came all the way into the zone, had a big rejection, and then price closed as a bullish engulfing, shows us a sign that price had came down and grabbed liquidity yet again, and support was heavily rejected very strongly. Unlike over here with current price action, yes, every time price came into the white zone, you could have looked for a potential buy opportunity, but it wasn't strong like these. Notice how it only took maybe 2 days for price to reject. Here it took multiple days to have a real big rejection out of this level. Even though, yes, price did reject the level, it took multiple days for that to actually play out. Now, when it came down to price actually coming into the zone here, rejecting and then closing with a medium probability bullish engulfing candlestick, what you could automatically expect is for the next level of resistance to be retested on the daily, the nearest level of resistance, which is all the way up here. So this should be a target or a point where you see price traveling. This should be a projection. Does that mean you should take a trade right here? No, we're going to break it down to a lower time frame and look for real trading opportunities. So pretty much that bullish engulfing was a combination of these two candlesticks right here. Here for you to actually take an entry at this point in time would have been a very, very aggressive entry, which I don't necessarily agree with. Now, what we're going to be doing is combining our knowledge of supply and demand and support and resistance, right? So I'm going to get rid of this line here. So we know that this zone right here is our level of supply. We know that we have a bullish engulfing on the daily. Just based off that bullish engulfing on the daily time frame, right, we're starting to look to combine everything together. So what do we have on the daily? On the daily, we have a big rejection of support and a bullish engulfing. That is an indication to look for a buy, right? Now, when it comes down to looking at the 4-hour time frame, what we could see is that here we have support and here we have resistance, right? So we have support. This is a 4-hour level. We have resistance. And let's just pretend we aren't here yet. So what else can we actually spot? We also have a level of support and resistance here as well, right? So what we're looking at here is price actually reject daily support, come back, hit daily resistance where they were met with a little bit of selling pressure, and now price is slowly but surely look at this, rejecting 4-hour support over here. Can we look for a trade opportunity here? Yes. Why is that? Because price is at a level of support. And what we could potentially look for here is look for an entry above support, right? And our stop loss under support and target the same level of resistance, right? So when it comes down to it, we already have a confirmation to buy, 2 confirmations to buy really on the daily time frame. Me personally, I would use that as one confirmation on the daily, right? We have rejection of support and a bullish engulfing medium probability. If it was a high probability engulfing candlestick, then I would make that 2 confirmations, but since it's a medium probability engulfing candlestick, I'd make that 1 confirmation. You could do what you want. It really ultimately is up to you and how well you, I don't want to say position the trade, but how you put more power, if that's how you want to call it, on the specific price point. Maybe power isn't the best terminology, but where what it means to you basically is a confirmation. You know what I mean, right? Is a rejection of support, does that mean a lot more to you than the actual engulfing itself? It all depends on the individual, and that's something that you just have to determine as a trader, right? We're all not going to have the same pedestal for specific confirmations as the next trader. So now let's take a look at the market structure here, right? We see price come down, come up, come down, come back, retest the high, and now we're trading at our previous lower low point, where we could see a rejection as an inverted head and shoulders pattern. Notice how price rejected resistance, and now with this candlestick rejected support. So H4 is in a little bit of a range here. What we could do at this point in time is break it down to an even lower time frame, such as the hour time frame. What you could see is price pull up, pull back into support, big engulfing, pull back into support, big engulfing. So what this shows us here is that buyers are interested in this level of support. And what could you have potentially done? You could have pretty much used the hour time frame and the 30-minute time frame, because again, we're looking at a combination of time frames here to look for an entry at either of these points after rejection of support. Ultimately, how you're going to enter is up to you as the trader, right? Some people might enter right at the first rejection being here. Some people might wait for a strong entry confirmation. Me personally, I would have taken an entry off of this pattern right here, this double bottom pattern right off of support. So what we're going to be looking at here is, let's look at the 4-hour time frame and the 4-hour moving averages. Right now, price is kind of in consolidation here, right? Yes, at this point in time, it's red over blue, but price is trading above the 20. If we pay attention to the moving averages on the hourly time frame, though, what we're going to most likely see is a blue over red SMA. Now, notice how price is riding above that 50 SMA quite nicely, and it's blue over red. So we're already starting to have more than 3 confirmations, but as of right now, it's still a type B setup. Now, if we go to a 30-minute time frame, what we could see is price actually come back, and we're still bouncing above support. So we know as traders that we want to buy at support and sell at resistance. In a case like this, the probability is a lot higher for price to actually go higher. Why is that? We want to pay attention to this bullish momentum here. This is that big engulfing candlestick on the daily. Notice how we broke above these highs, and we actually broke above previous resistance here, because notice how here was support and here it was resistance. Once price hit this level here, it went up. Once price hit this level here, it went down, right? Notice how it broke above resistance, and now it's holding as support. So immediately you should say that, you know, on the daily time frame, price has the highest probability to come up to here, right? And on the hourly time frame, what we could see is that price is bouncing off support time and time again, right? And you have to keep in mind, the daily has a very big engulfing candlestick, right? Again, showing you that the probability for price to go up is already a lot higher, because we rejected a key level here, being this level of supply on the daily. And I just want to stress that enough. Don't forget where you are on the daily. This is why I would not be looking to sell, because the daily literally just formed a big engulfing candlestick with a big wick rejection. When you see a big wick rejection on support and then you see engulfing followed up after that, that shows us that there's a lot of buying pressure in this area. So if you missed out on this first buy opportunity, this is your second chance entry, right? Is a pullback, right? Can we potentially use a fib from this point to this point? Yes, we pulled back 38.20%, and we're consolidating above the 38.20%. This was the 38.20% pullback right here, right? Along with that being said, look at all of this rejection here as well. Notice how price, every time it came into the zone, it rejected. So what's the best thing for you to wait? Wait for price to come into the zone and reject again. Notice how the moving averages are blue over red. We already have 4+ confirmations, being the engulfing on the daily, the rejection of our daily level of supply. We broke above resistance, and now resistance is holding as previous support. That right there alone is 3 confirmations. We have the blue over red moving averages. That's 4 confirmations, right? So this is already starting to look like a potential type A setup. Now we look at the 30-minute time frame. We could use a 30-minute or the hour for entries. It just depends on the individual. I would have personally entered at this point right here. After the thing is, if I wouldn't have taken an aggressive entry here, which wouldn't have been the smartest option, and then if I wouldn't have taken the entry here, this would have been my next point of entry. We would not have taken an entry here because the size of the candlestick, it moved too far away from support. We would not have taken an entry here. We would not have taken an entry here because again, it moved too far away from support. Right? If you're waiting for that confirmation candle, there's no entry for you here. There's no entry for you here. There's no entry for you here because price moved too far away from support. Right? Our goal is to try and get in at support as close as possible. Now, there's going to be times where you're not going to be able to take an entry, right away, and you're just going to have to be patient and hope price pulls back and actually retest support, which most of the time it actually does, right? But there's no possible way for you to have taken an entry previously, right? Now, again, we already have 4+ confirmation, so all we need is an entry confirmation, and it is a type A setup, right? This would have been my entry confirmation here, a medium probability bullish engulfing candlestick, right? Notice support being rejected 1, 2, 3, 4 times. Then we have a 5th rejection with an engulfing candlestick, right? So this would have been my entry point here. Now you have to remember, you have to ask yourselves, before you enter the market, where are you going to get out if you're wrong and where are you going to get out if you're right? I've determined that, again, we want to place your stop loss under support, right? Notice how far away price is from the average wick. The lowest wick we see at this level of support is right here. And notice how far away our stop loss is from that. This is a very nice, comfortable stop loss because even if price does come all the way back down to here, it's still under support. But we know at this point, if price is trading at this area here, right, then we want to get out if we're wrong. Why? Because price at that point in time is probably forming an engulfing on the 4-hour and the daily time frame. And at that point in time, right, the probability of price continuing to come down to our main daily support is a lot higher. Why? Because price is breaking under our 4-hour and our support being right here. Right, this is what you call an intraday level. These intraday levels are also just as important as our main levels, right? So we've already identified that this is where we're going to get out if we're wrong, because again, if price breaks under this zone, under support, it's most likely going to continue to go down, and we want to cut our loser as fast as possible. And we're going to target all the way up here for about 6 times our risk. Right, because again, we're looking for that confirmation on the daily time frame. We're looking for price to hit this area on the daily. Now, not right away, but after a few hours, you would have seen price actually go up in your favor, and you would have been up at most 3.4 times your risk, which ultimately it's up to the trader if you want to take profit at that point or not. That's how you could have caught the first position. Now, I would have used a 2% risk on that trade. And again, now if we look at let's just even go to the 4-hour time frame. What we see is a bunch of wicks, bunch of rejections to the downside, and then notice the nice big engulfing right here, right? Nice big engulfing right here. Let me get rid of that trade, right? So that was one example of how you could have caught this move right here, right? Notice the nice big engulfing. And if you didn't want to take a trade, because the thing is, if you would have targeted this daily level, that would have been more of a swing position, because it's a lot bigger of a move. It's going to take a lot more time to actually play out. What you could have done instead is point A, point B, right? Since this is a 38.20 rejection, you could have just looked to target this -27 extension level. I believe our entry was somewhere along this area right here, I believe, right? Let me undo that. Stop loss goes under support around the 50%. And then even if our second take profit gets hit, right, because you can't take this trade anticipating the first take profit. That's like a 1-to-1, which is acceptable, but it's not optimal, right? If the second take profit would have get hit, then you would have made 2.4 times your risk. And if you look left, what do you see here? Support, support, resistance. And then we met resistance here, right? So that target would have been hit quite nicely, right? And then, the third target eventually would have gotten hit, but realistically, not many people would have held that trade. Now, let's continue, right? Notice this black line here, right? After price closed above support, what could we see? We could see that price broke previous resistance broke previous support. Notice how we have support. Notice how we have resistance. Notice how price also broke above the moving averages, right? We're trading above the 50 SMA, which is an indication that we could potentially look for a buy. What does a daily time frame look like? We have a nice bullish variation pattern right here. Notice how we broke above the previous day's high. Notice how we broke above this day's high as well. Now let's take a look at the daily highs and the daily lows, right? So notice this is on this candlestick, this is a lower high. Why is this a lower high? Well, if we look at this day, it's lower than the previous day's high. And this is a lower low. Why is this a lower low? Notice because on this day, it's lower than the previous day's low. Now, I'm not saying these are your major market structure points, but what we're doing is candlestick analysis. Notice how we started going from lower lows to lower highs to where we had a lower low here, then a lower high, price closed, then a higher low, then a higher high. You see the transition there, how the wicks got higher and higher, right? And how each low started getting higher as well. That's candlestick analysis, right? You have to look at the daily time frame, see how this daily time frame is forming. Either way, notice how price again closed above resistance. So we have an official break of structure. We also have a 3-leg extension. Now again, for those of you who went over the market structure section of the course, what is a 3-leg extension? A 3-leg extension confirms a new trend. Why? Because price made a high, then a higher low, and then a higher high in this situation. Right? Now, notice how price broke above resistance, right? What we could also do here is pull a Fibonacci retracement tool from the lowest point to the highest point, which you could see that price pulled back to the 618 and had an immediate rejection. Now, me personally, I like to use a 30-minute, right? So this, again, is another intraday level. It is not a major level, but it is an intraday level. Notice support, notice resistance, now price broke above resistance. What this candlestick would have showed you right here, this bullish candlestick, is that price came down into support and rejected. That is your first sign of a buy. What type of setup is this? A break and a retest. Notice how support held here. What you could start doing at that point in time is looking for buys. We already took this type A setup here. We had 4+ confirmations. What are the confirmations on this trade? The daily is making higher highs and higher lows. Another confirmation, 3-leg extension. This is possibly the pullback and you're looking to catch the 5th leg. Why is it the 5th leg? Because remember, we're looking to buy on the higher high. We're looking to buy on the higher low. So this would be the higher high here. This is the move we're looking to catch, right? 1, 2, 3, 4. We're looking to catch the 5th leg here. So you're looking to buy somewhere along the 4th leg of the extension of the trend, right? All we're simply doing is anticipating when that 4th leg will end, where we can look to continue to actually take a buy position. Now, in terms of confirmation, we have the daily time frame showing us higher highs, higher lows. We can get all of our confirmations honestly here off the hour time frame. So we have a break of structure. 1, we have a 3-leg extension. 2, we have the blue over red moving averages. 3, all we're looking for now is a pretty much an entry signal. 4, we also have the 618 rejection on the Fibonacci retracement tool, right? And again, what could you potentially wait for here? Go to the 30-minute time frame. Our best bet is to look to enter around this horizontal line that I have here, right? So again, this is support. Notice how we also have support here, right? I'm going to get rid of fibs, but just keep in mind that we're still at the 618 level, right? All of this is support. Price is still trading above support. Even though it looked like it broke here on the 30-minute time frame, remember, support and resistance is a zone, right? This is the zone in theory. Notice how price came into the zone, rejected the 51 SMA, and then we had a bullish variation pattern. That right there would have been your entry signal. I'm going to buy right here. Where's your stop loss going to be? Under support. Where's your target going to be? Resistance. What you could also do, again, pull your fibs. If you don't have a very clear idea of where you want to target, pull your fibs. Use an extension level, right? Look at this. You're going to get 2.3 times your risk. Even if you lower it just a little bit, which you could, you're going to get roughly 2.5 times your risk. Now what is this? Price rejected resistance twice. Again, increasing the probability of the trade. When price rejects resistance multiple times, it shows us that sellers are trying their best to break, or my apologies, support. It shows us that sellers are trying their best to break support, but they simply can't because buyers are too strong. Sometimes they will break support, but we're pretty much betting on that support is going to hold because the probability of the buying pressure is there. We see buyers reject time and time again. Now, when you have momentum like this, because again, notice how big this candlestick is compared to the bearish candlesticks, right? Momentum came into the market. We have a nice double bottom, meaning we have two rejections of support on the 30-minute time frame. That is our entry signal. There's a high probability bullish variation. And notice how price went up. Again, that was another type A setup. And that's it, right? Now, we can even look at like the 4-hour time frame, right? And keep in mind, right, this is still support. Notice how price rejected support, right? This is going to be a little bit trickier because some people might be thrown off here, right? Because of the big bearish pullback and the break under the moving averages and this engulfing. When you see something like this, you always want to consult with the higher time frames. When you're a little bit maybe indecisive on where price might go, consult with the higher time frames. What does the 4-hour tell us? Well, we had a big move to the upside, but keep in mind on the 4-hour time frame, we haven't made a 3-leg extension yet. So what is it showing us? A pullback. It is a simple pullback. Remember how in the trend section I talked about there's going to be trends within inside of trends, right? On the hour time frame, it looked like price could actually start a new trend. Why? Because of the size of the pullback. But keep in mind, this black line is still that 4-hour level of structure. And what you could do as well is, remember, you could draw a zone, right? What you could do is go from the wick all the way to the body, and if you drag that out, you see it play out so clean on this 4-hour time frame, right? To the point where it doesn't even look like price really broke under support, right? So here you have the zone right here. What does it show us? Rejection. This is where we took that first buy. And by the way, when you always want to be flipping through time frames, right? When you would have seen this engulfing on the 4-hour time frame off of this level of support, right? Again, what does it show you? Break right here, retest, engulfing. You could have looked to buy right there again. This would have been even more confirmation for you to actually hold your buy position because we bought somewhere down here while this 4-hour candlestick was actually forming, and then price flew up. Now, again, blue over red moving averages. Your first sign to buy is when price rejected support right here, and then price formed this engulfing. That would have been your first sign to buy. So let's highlight the engulfing, right? This is our first sign to buy right here. Go to the hour time frame. What does the hour time frame look like, right? Because we're still looking to take a buy position, right? So pretty much price rejected support, continued to trade higher, then pulled back, and then it gave us a bullish variation pattern. Now in this situation, I would go to the 30-minute time frame just so I could see a little bit more detail with price and really see what's kind of going on here, right? So your first indication really would to look to buy is right here in this 30-minute time frame. Why? Notice this level of structure and notice how price broke above this high. This is what you call a counter trend. Notice how we have a low, lower high, lower low, right? This is called the counter trend. Low, lower high, lower low. Now we know on the 4-hour time frame we're still just in a simple pullback. Now let's go to the 4-hour time frame. Let's pull out a Fibonacci retracement tool, right? Where did price pull back to? 38.20%. And again, we're trading above that 50 SMA. Let's go back down to the 30-minute time frame, right? Let me try and find my spot here. So we're all the way to the left. Let me go back. So we already took two type A setups there, right? So notice how we have, again, this previous market structure high. Let me get rid of that line because it's not straight, right? Notice how here we have our previous market structure high, and then here we also have support and resistance, right? Notice this resistance that we have here. Notice this minor support. Notice resistance here, right? Once price actually started trading above resistance and getting higher and higher, here you have a bullish variation, then a pullback. Notice again the attention to detail, right? Notice how price came down, tested this previous resistance here, where we have this resistance here as well. If you'd like, you can draw out a zone just to make things maybe a little bit less complicated. In this situation, I would draw out the zone from exactly where resistance is. I'm going to draw it from here till it engulfs pretty much this high right here, right? So this is resistance. Notice how price broke above resistance, came down, and held a support. This is where you could have actually looked to take another buy opportunity. You could have bought right here on the 4-hour time frame and look for a swing, but the issue with that is your stop loss would have been absolutely massive, so there should have been like really no trade. But now here, once price actually broke above resistance, because notice again how 2 candlesticks closed above resistance, this was the break. Notice the cross of the moving averages being blue over red, another indication to buy. Remember, we already have the bullish engulfing on the 4-hour. We're really just waiting for a pullback to look to actually take a buy position, especially if you didn't buy right here, right? And then on top of that, look at this engulfing right here. This could have been your entry signal, right? Now, realistically, if you would have entered there, we know our targets are going to be somewhere up here. Where's our stop going to be? Under support. Where's support? Right here we have resistance, right? So let's actually put our stop loss under resistance, right? I'm also going to put my stop loss under this red moving average here as well, just to give price a little more buffer room. And we're going to look to gain 3 times our risk. And this is a type B setup because we don't have as many confirmations. We have about 3 confirmations here, being the break of structure, the cross moving averages, and then the engulfing. So I'm only going to risk 1% on this position, right? And anyways, guys, that is Confluence Trading 2.0. Notice how I'm tying all the time frames in together. Remember, once you start getting confused, just bump it up a time frame. See what you see there. If you don't see anything really and you're still a little bit confused on direction, bump it up another time frame higher and see what you see there. If you're still confused, bump it up a time frame even higher and see what you see there. Now remember, like, it's exactly what I'm expecting here. Price rejected support, so the probability of price coming to resistance is very high. So let's see if price can actually hit that level. If it doesn't and it comes back down to support, then you look to buy again. If it breaks support, that's when you start looking to sell. But again, there's going to be prices and levels that are more desirable to take trades. When you talk about swing trading, you really only want to take trades at certain levels versus intraday trading. Intraday trading, you could take trades at intraday levels, but just know you have to hold them like an intraday trade. Anyways, guys, I'll talk to everybody in the next video.